Hey everyone, hey, this is Rick Altman here, your host with LMA Trading, and we are back with you with our Tuesday morning. It is about almost 20 after 6 in the morning here in the great state of Ohio, of all places. Um, hey, just a couple things here. We're going to go over the markets, a little bit of what we're seeing here today. A little bit different than yesterday. We're not getting the big pop, but I wasn't really expecting the big pop today. Would like to really see the continuation of what we had ran up to yesterday, but we ran up to new highs. In the Qs and the S&P, which is what I expected to happen. But we're going to see how things kind of pan out here today. But I'm also going to share with you a little bit because, well, let's just get into some housekeeping and then we'll get into what we're going to talk about. Well, you should know this if you don't already, but I'm not a financial advisor, and I do not give financial advice. I don't send out trade alerts or anything like that. I ask for you to do your own due diligence, look for your own entries and your own exits based on your own risk analysis. I'm an older trader. I'm a plus 60-year-old trader, so rather risk adverse, and look for high probability setups. I like the credit spreads play. That's primarily my bread and butter on the indexes such as the SPX, but we also trade in equities too on credit spreads when we find the setups that we're looking for. And with the pullbacks that we've had in the market, there's been some pretty nice setups. So we'll discuss some of those, what we've got going on here as we take a look at the markets. As you know, that I record these videos as part of my trade journey and also as part of my um, trade journal. And I also have a written trade journal. I'm going to share that with you here today, also a little bit of what I do and how I do that. But, you know, I document and kind of journal everything that goes on, and then I'm going to leave you with one thing that I've learned through my journaling, and actually that has helped me the most when it comes to trading, especially as a risk adverse trader. And I'll just kind of let you know that we're going to talk a little bit about the emotions of trading and how I won't say I've got a handle on all the emotions, but let's just say how I try to combat the emotions that come into trading, because I don't like to lose money. And so I like to win. And not only that, but you can't go broke taking profit. That's what I always keep telling myself. So with that being said, I'm going to go over my written trade journal too with you here, and everything. And I'm going to kind of start with that here. And I usually put that on I use a PowerPoint for that, and we take a lot of screenshots. We put that into a PowerPoint, and then that allows me to go back through and talk about what we've got going on, and a couple things here. So as you can see here, we've got different slides that kind of goes through, and we have notes on each slide. We kind of change up on them. We talk a little bit about our entries, and so we draw, we mark up the charts, and we do all those types of things where we're really showing you exactly what we've got going on, or what I have going on with each and every trade. Begin to decipher that and break it down as far as what we see in the markets, what we see, how they've compared, and then break them down throughout the day. And we just kind of continue going down through, and give the dates and what we have going on. I want to give you a tip here on what I've learned on my trade journal, and as far as also recording these videos. And I mentioned that in the beginning that it deals with emotions. One of the things here that I've try to look at is when I'm trading on emotion, when I make a trade. Um, when I make a trade and everything, I look at and I ask myself the question: Am I making these decisions based on the technicals, based on certain fundamentals, based on the charts, or am I making this decision purely emotional? For example, FOMO, the fear of missing out. And when I see a big move up and I didn't get it and I missed the move, am I, do I have FOMO? And I ask myself that question. If it's an emotional, then I cannot take the trade. Cannot enter the trade because it's based on emotion, not on what I see. It's based on what is currently happening. The biggest thing is my best plays I've ever had or that come is because I get in before the move, and then hold overnight, or and I take the risk overnight. And in they say hope, there's no hoping, with the plan that you know the stock or the ETF or the index is going to gap up and move up in the morning, and based on my technicals and the things that I'm looking at. So from that standpoint, I have to ask myself now, is that decision based on emotion? The other thing is, you know, is it based on, and when I'm in the trade and we go into the red and I get that feeling that I need to get out, because, in the beginning, I closed a lot of trades. I mean, how many of you can say you've closed a trade only to have, for a small loss, only to have the trade go back up and hit your target? I, you know, I could be a very rich person if I would have probably stayed in many of those trades. In the beginning, and at best, I was a break-even trader. And so, not until I kind of got a handle on that here recently, and looking at say, okay, this is rather an emotional situation, and I cannot make those decisions based on emotions. Those are the things that I have found out journaling when I write out my journal, and and I tell myself that it's based on emotion. And you know, so when I look at my trades on, like for example, yesterday we closed out our SPX. It was going to expire last night, but we closed it out. We left 5 cents on the table, on a 5 cents on a $10 white spread, and so we picked up a $245 credit per contract, and so that was a good trade. But we bought that on the bounce. So we get the chart and we show the chart right here, and so I break that down. It's on fire, and we have the readying fire, and we've set new highs, and we also have orders in on a 7 DTA, but it hadn't filled yet. We were looking for $1.45 credit per contract, because the VIX was dropping and pulling back. Like I said yesterday in yesterday's video, the VIX was up around 19. I said I'd really like to see the VIX get down below 18. Better yet, if it gets down into 17 or below 17. And we got there. And because of that, we saw, I put in $1.45 looking for a little bit of a pullback on the S&P. And so, this is about 80% probably 75%, I think 80% probability. And so, at about a 25, maybe 27 delta. And so we were shooting for this, but it just didn't come to us because so the order didn't fill yesterday. So we'll look at it again here today. The VIX is popping up here a little bit this morning. And so we'll see if we get a little more volatility in the markets, and we can, maybe we find a good entry to pick up that credit spread for next week. But that's kind of what I do in my trade journal. So let's go ahead and jump into what we see here in the markets. Right now the Qs are up. The Qs are up 47, and the Dow is up 50. It's kind of reversed around a little bit. The Dow was below the cues. So, which might have indicated a little bit of rotation possibly, but it's still early. And the Dow looks like we're in a daily squeeze. So the Dow's pulled back a little bit. The squeeze is, I won't sit here and say it's fired. Ready aim fire has given us a buy arrow, buy signal down here. So, we're probably going to see more upside um, to the Dow. We'll see what happens at the cash session. Right now, not a lot of momentum one way or the other, and it's just kind of sitting there flat. We kind of, I think when the markets opened up here, a couple hours ago at 4 a.m., it's, the indexes popped a little bit. Each one of them popped, and they've got a topping tail where they've pulled back a little bit from their highs, but um, the cues are kind of giving us the same signal. A couple days ago, we broke last Friday, we broke the 15,000, and then we turned around and yesterday broke the 15,172, and we went on, set a new high yesterday, and we've already popped a new high this morning in pre-market, and we come over to the S&P. The S&P is the same way here, new high yesterday and popped a new high in pre-market. So, I'm looking for, tech to kind of maybe be the leader here and push prices a little higher and everything. So let's go ahead and jump into on our chart here. And let's take a look at the more longer term trend. This is our daily trend here. Just kind of give you a heads up. Let me straighten my charts out a little bit here so we can see a little better. And, the ready aim fire is a new indicator that we've just installed. And I really like that, the ready aim fire. So, the Dow showing here, we're getting, in the buy zone here. So, we'll be watching this here today and would expect possibly to push up towards the highs. We are within 2% of the high. So good chance we could get there today if we get some movement. Weekly trend, long-term trend, still very, very bullish, extremely bullish. So, but still a lot of caution is I have a lot of caution in the markets because the internals, things like that, still, we're still way overextended. So, would still like to see a little bit more of a pullback. But right now, we've got several longs on in position, and so I would like to see this market continue its rally, at least for the remainder of this week would be awesome. And that's the Dow. Let's take a quick look at the Russell. The Russell, as I indicated the last few videos, is it kind of put in this double bottom. I have this circle. This is the target range on this. On our trend line right here, and as you can see, we are right at the base of the just below the 50 EMA that I have here. We are above it. We closed above the 21, just barely above the 21, and we are above the 21. Our ATR trailing stop has switched, and we've got a green dot, which is a bullish momentum play. So, I'm expecting us to pull into this zone right here. And then what I would probably venture to say is that the Russell's probably going to begin to pull back and head back down. So we may be looking to play the Russell to the downside if we get in here. I wouldn't go long here at this point in time. I would need to see to go long. I would need to see it break this trend line and come up here and probably break 2260, 2260 to 2280, and maybe let's just say, 2260, 67, let's call it, and then or 64, 2264. If we were to break and hold that where this high's right here at, we would probably look at this to go back, back higher. But right now, looking at this to kind of reject right in this general vicinity right in here and go lower is what we anticipate, because we are in long-term trend is in a downtrend. We are in a weekly squeeze to the downside. It has not fired yet, and our daily squeeze fired a few days ago, but the TTM squeeze histogram is still negative, so it has not. We have not shown momentum, a strong momentum to the upside. Um, so the jury's out on this right now. Ready aim fire still showing. It's not. It's not there yet. There's still more momentum to the downside. It hasn't, and there's still more selling to go. So um, just be careful in the small caps is the way I'm looking at this. And that's kind of what I'm thinking about on the Russell. Let's take a quick look at the Qs. The Qs are, on fire. Uh, they are trending up, strong trend. We've had some nice pullbacks on the weekly chart, and but this is not over yet. On the long-term trend, we are not over. Any pullbacks have been very, very minor, and we are in a daily squeeze here, and so we popped a new high today. 15,384 is what it's telling me here. So we'll see if we can hold this high, hold the high above yesterday's close. That would be a good sign as we move. And our ATR is flaring out a little bit, and so I would expect us to probably push higher on this here, and we'll see how much more we get today. But there's more room to the upside before this really decides to let us have it. So the trend and the bulls are winning the battle here. Let's take a look at the S&Ps. The S&Ps again are very, very bullish, strong trend between the one ATR and the two ATR. We've been getting pullbacks to the one ATR on the weekly chart, and we've been bouncing up. And on the daily chart, bouncing off the 50. And then that's where people come in and start buying the dip and pushing up to new highs. Everything's showing us our daily squeeze is firing today with momentum to the upside. We'll see if that continues. Like I said a few minutes ago, I hope it does, that we continue to the upside. Apple being one of the leaders in the Qs did break above the 150 yesterday, but it did not hold the 150. So it's trading in this really, really tight range here, and right at about 150. So it's struggling with that, and so we'll see how price can manage that. And right now we're not. We're showing kind of a flat open on this. We've got a daily squeeze. Daily squeeze just is not getting the momentum. We do have a buy signal on the ready aim fire, but we've got decreasing volume. So looks like Apple could be weakening a little bit, and because we are in this tight squeeze, I think we're at the top range. So we'll probably see a pullback here, possibly back down, below the 21 towards the 145. As long as we hold the 145, we're in good shape. I would definitely, pick a credit spread up or something here. If we pull back below the 21 and, towards the 145, I'll look at another spread on here, such as a here. And then here, and then we got out yesterday. Here and took we we took some profits off the table, and so that's what we did with that. Just to kind of let you know, we picked up some Facebook yesterday. Facebook, we picked up a credit spread. We sold the 350 strikes here. So looking for Facebook to push higher back towards highs here and stay above the 21 is the plan on this one here. So would like to see this hold the 360, the 361. Right now it's showing that we should be getting a little bit of a gap up here today. Not much, but a little bit push to the upside, which I think is a good thing there. We picked up some roadblocks also. I debated on roadblocks whether or not to whether or not to put that in as a debit spread, but we went with a credit spread on this, sold the $80 strike here, and we're looking, this is our profit target up here around, 90. So we're looking for about a 2 ATR move here, and we will be out. So we have 24 days. All these longer equity positions, we are looking at those to hold those into, we have we bought the September 17th monthly expirations on those. So, and so we're looking at that to hold above there, and we've got a nice credit on roadblocks. We added some Moderna with all the talk here. Moderna is looking real good. Picked it up right at the close yesterday. Haven't really got my charts put in here, but we sold the 380 credit spread here, and looking for a push. I'd like to see a push back up to the highs, back towards the $500. Again, 24 days. This is a little premature on, we're getting the signal here that, we may have reached the bottom here and we're starting to make the move up. So a little premature on the spread, but I feel with the news and everything going on with Pfizer just getting the green light from the FDA, more shots, Moderna's in the position to make lots of money. So I felt this was a high probability. We took, out of the money, pretty out of the money credit spread. So I think we got about it was $395 credit. And we took a couple contracts on that. So, this is shaping up good. And so, we've got a couple contracts still left on the SPX, and so those are looking really good for the end of the week. And so this is kind of where, with the new highs. So we will be looking for some additional positions here, and because I believe that we've got momentum building to the upside. So I think we're going to see movement, be it so lightly, continue on this play here. So that's what we're looking at for today. Appreciate your time, appreciate you watching. Any comments, questions, any questions on, what I do for my trade journal, anything there, feel free to post comments. I'd love to have your feedback. Hit the like button, smash it. Let us know if you like our video. If you don't, give me the thumbs down. I know probably I'm rather a boring, monotone person, but we, this is my journey. This is my part of my journal. So for me to review these trades, so happy trading to you. Again, have a great Tuesday, and bank some profits today. Have a good one.